7,000. It's been a key support level for the German DAX for 2.5 months, but it gave way earlier today. Rising concern over Germany's economy pushing the DAX down 5% in the last couple of weeks. I'm Jamie McGeever and this is today's Market Pulse. Well, here to discuss European equities today, I'm joined by Reuters Chief Stock Market Correspondent for Europe, Simon Jessup. Simon, let's start with the banks and financials. The Eurozone banking sector down 1.5% today, underperforming. What's driving that lower?
Yes, it is. It's the worst performing sector today, giving it back a little bit more of its strong summer rally. Nothing fresh, just the primary issue is just Greece and the broader Eurozone debt crisis. We're going into the weekend. People are concerned about how Greece is going to fix its funding, and that's just leading to a bit of a risk-off day today.
Of course, we've got Eurogroup on Tuesday, where hopefully we'll get some answers there, or not. One bank in particular, a French bank, having a bad day today.
Yeah, leading the way, French bank Natixis, second day of falls. It posted results yesterday. Took a 7% hit then, it's added 4% to that today. Fueled in the middle part of the morning by a breach of the 200-day moving average, which has just triggered a load of stop losses, and it's...
So it's heading south.
Yeah.
The bigger picture for banks, if we take a step back, is not looking particularly bright either. There's a fantastic piece on Reuters today that shows that at least 160,000 bankers have lost their jobs in the last couple of years, and there's more to come. That doesn't sound good. No,
I mean, it's not a great time to be a banker. The restructuring, as we all know, has been going on for a couple of years. It's like to continue. The regulatory regime is changing. Risk is coming in. And, you know, market volumes at the moment are incredibly light, especially in equities. So all of that adds up to job losses, I'm afraid.
And one other sector, let's finish up on basic resources, European basic resources, miners, etc. They're having a particularly bad week as well, down 5%, the worst week in 6 months.
Yeah, there are a number of sectors that obviously get hit more when growth fears arise. The miners are the chief among them, really. And this week, as you know, we've had some fresh bad data out of Europe. Growth is looking dodgy going out.
And of course, yes, as you say, this week the Eurozone officially back in recession.
Yeah, indeed.
OK, Simon, thank you very much. Well, on to foreign exchange. And the yen is having its worst week against the dollar since February. The greenback up over 2% against the Japanese currency this week, and the charts point to further dollar gains ahead. Commerzbank analysts say that technicals and fundamentals both point to fresh yen downside. Among the negatives is the man likely to be Japan's next Prime Minister. Opposition leader Shinzo Abe favours a higher inflation target for the Bank of Japan as part of an even more expansionary monetary policy. Commerzbank now targeting 81.78 ahead of that. Well, the good old days. Remember them? Remember when the only way for stocks was up? On this day in 1999, the volume of trades going through the NASDAQ caused the market's trading system to melt down, meaning there were no electronic quotes or trade reports for 17 minutes that afternoon. Volume was on the way to a record 1.5 billion shares. Ah yes, the good old days. Or perhaps not. Just 4 months later, the bubble burst and the NASDAQ went on to lose 80% of its value. Even today, it's still around 50% down from that peak. Well, that's all from us for now, but join us every day at this time to take the pulse of the market. I'm Jamie McGeever. This is Reuters.